about but on that side of things, that the government does have influence over, which is that fiscal policy. So that's kind of
Mhm.
what I was thinking.
Interesting.
I was gonna say something else
Interesting. Yeah,
too.
it makes sense.
But I do want to see if there's like a database where I know there is where we can see like the terms for those government securities. Because if I go, say we go to one of those pages and it says like, okay, this U.S. government security that has a 8-year um, term, and it expires this year, right? Like that type of
Mhm.
stuff. I want to be able to see if we can identify, because um, when we think of carry trading is a term
Mhm.
that I've seen a handful of different times, when referring to the Japanese yen mainly. But all that is let's say we know the U.S. is about to cut their interest rates, which is going to potentially change the rates they have placed on the bonds and the yields. What most likely is going to decrease those, which is going to remove the confidence for investors to continue buying government, specifically U.S. government securities and bonds. However, Japan is expected to increase their rates. It's a day after the U.S. is going to potentially decrease theirs. So people, or not investors, what they would do is literally take their after their term for what the U.S. is up with their security, because the Bank of Japan is going to increase their rates. They move that money from a place that's going to decrease the rates. They move it somewhere where now they're going to have a rate increase. Um, and so I want to see if that information is available to us, because that's just how we can really start to gauge without even seeing the news next week. Oh yeah, we're going to be able to. It's more likely we'll go bearish, or more likely we'll go bullish, just because of the money supply.
Mhm.
It's like,
Mhm.
um, I don't know. So that was a handful. I've been getting out of hand with these type of conversations. I'm not gonna lie.
No, it's good. It's these rabbit holes that you get down, bro, and like
It's
you
crazy.
you gain insight on one thing, and then that makes you have a light bulb moment for another thing, and then that leads you to a completely different thing. It gets
Yeah, I,
it
I, I
gets
gotta show
pretty
you guys.
vast.
I gotta show you guys something real quick. All right. So this is a website. I had this website saved, but treasurydirect.gov. This is why I actually really love AI, because I found this website in the midst of me probably looking for bonds or whatever, and then it, of course, tells me exactly what I need. But these are,
Mhm.
from what I understand, this is the US only. So right here, treasury.gov is the one and only place. This is where Warren Buffett and his team come to buy treasury bonds, savings bonds. This is the only place. We also offer electronic sales
Mhm.
auctions of other US backed investments to the general public, financial professionals, and state and local governments. So we're on the same website that state and local governments purchase US savings bonds and backed investments, right?
Mhm.
And so this is kind of what I'm looking at right here, man. This right here is telling me that the current rates that are placed on these government bonds and securities are going to be expired on October 31st of 2024, which once we
Mhm.
once we come to the end of that expiration of that term, that's when this number will become different. Either different
Mhm.
being more, or different being less. But this number
Mhm.
will be different, and that will affect how many of these people we get coming in here purchasing dollar backed investments that then bring
Mhm.
appreciation to our dollar, that would bring
Mhm.
appreciation to our dollar and start to, get up in here versus continuously what we already really project, and that's devaluing that dollar. So I thought that was interesting. So like this was issued on 8/15, right? This 30-year bond.
Mhm.
So the term for that, I mean, of course, 30 years from now, I don't know. I know there's like something called repurchase agreements to where you can terminate the term before the term has fulfilled, and then repurchase that term because the rates will have been adjusted. I'm not sure if you can do what you can do that for. My knowledge there is not very deep, but this kind of does show what I wanted to see, and that's that there is an available site, because I haven't got into this yet. Actually, there's an available site where we can see this stuff super transparent. I can figure out when. Um, you can go ahead and take the screen back. I can figure out when the terms expire and whatnot. I thought that was kind of useful right there. And of course, if I want to look at any more data, I have to sign up.
Yeah, the bonds. I was talking with my barber actually because we were kind of talking about this stuff. And he'd been into bonds and annuities.
Mm,
Just during his past, he wasn't a CPA, but he was in finance in some capacity. But he was like, yeah, those bonds and annuities that he had purchased throughout his lifetime have saved him on multiple different occasions.
mm.
Just with the cash flow. Obviously,
What are
it takes time for. Go ahead.
what are annuities? Look it up, but whatever you.
So annuities, an annuity is a contract you enter, and it's essentially, to my understanding, it's kind of the same thing as a government bond, but with an insurance company.
Mm,
So the definition here, an annuity is a contract you enter into with an insurance company to provide a guaranteed income in exchange for a payment or a series of payments.
so
How does a new
I pay like a
The insurance
monthly.
company makes a series of regular spaced payments to you in return for a premium or premiums you have paid. So it's
Interesting.
kind of like an insurance deal.
Interesting.
Very, very interesting. Very, very interesting. But I'm gonna use the restroom real quick.
All right, I'm
Fresh.
getting my trade locker, my interactive broker screen with my live account set up real quick. I'm gonna actually
Okay.
screen record this. I actually don't even mind. I'll share my screen for this. Setting up my new platform. So this is I have it already set up as far as my interactive brokers on my paper trading side, but it's completely separate account. So I actually have to set my trading station for interactive brokers, uh, regulated broker. Um, no anything we ever have to worry about with our money. Direct deposit straight from my bank account, United States dollars. They do whatever country you reside in. They'll be able to do the Australian dollar. They'll be able to do the Great Britain pound. Direct deposit. Do your freaking wire transfer. I just did my ACH, so I connected my bank account. But this it just first of all just secures our money. That's kind of how I'm looking at it. Never have to worry about anything with our funding being at jeopardy. Like they have
Yeah.
insurance in place, for over $200,000, or I forget the exact number, but if something goes wrong with our funding, uh, so it's really excited to be able to be on this broker here. But I'll go ahead and just want to get my screen set up. So let's do that.
And that's with Trade Locker.
This is with interactive brokers. Interactive
Uh,
brokers. So it's actually one of the leading um, brokers in all of the world. Um, predominantly used for stock trading. But as we can see, they've re-innovated their platform, and so we've kind of gotten at the right time to where we can make it just for what we need it to be for. So I actually really am enjoying it. So let me I can get so it's like my order summary down here, so I'm able to see, the orders I'm in, the summary of them all. And there's another button that we can get for live trades. Once I find out how to pull it back up. There we go. Live orders. Close that. We got summary, we got live, and we got trades. So I can actually get rid of that one too. Live summaries. And then we want watch list. I want to know. Oops. And then we need our order entry, which I'll put right in the middle. Get rid of this. Let's see, plus. I like how it's not centered. That's fine for now. I mean, do that either. Alright, that's that. Just rock with that for now. My orders, that in there. 25K.
Getting the IP right. Or traded
Yeah,
workstation.
yes, sir. I think this is the only thing I need to figure out. Should be able to do. Units.
Yeah, I just want to make a quick note that our XAUUSD pair right now it's backed on multiple time frames on for a bullish move. Over the last couple of minutes, we've seen gold move bullish over the last couple of minutes. But I just wanted to note that for the live call here.
Yeah, I was just waiting till you got back. Here, here's this. Take the. You want to take the screen back? My screen sharing right now?
Okay.
Yep.
Yeah. Got which
Yeah,
units?
looking at the gold pair. Let's move our eyes down to our MACD. Let's just read some of this volume here and why this could make sense as far as us having backing for a bullish move here. So again, in the name of top-down analysis, what I'm looking at here is the loss or the lack of sellers and sellers volume. Do we see that volume turning around towards the bullish side? And really simple look for us here. Again, this is the daily time frame. Then if I go down to the 4 hour, you see fresh green dot, fresh buyers volume on our 4 hour. So that's two time frames that back us. Going to the 1 hour, fresh green dot, fresh buyers volume. That's beautiful. That's three time frames. Once I have three time frames of backing, especially on those higher time frames, I'm feeling really good. I'm really good about an entry. And you go then down to our 5 minute, and you see that strong buyers volume coming in the market there. That makes four. The move has happened. I want to say the move is finished, but we have seen some of the move transpire already. But again, we still have backing from multiple different time frames, including our higher time frames. So that's really, when I'm gauging a position that I'm going to enter on, that's what it comes down to for me. Do I have backing from multiple different time frames? And then now with the development of our macro understanding and our economic indicator understanding, now we can use that as well. And then if you have the backing of that, if you have the backing of the general sentiment for currency, and then you have and then you have multiple time frames on your side. Those are the pretty ones. Those are the safest, cleanest entries we could possibly enter. And the ones I only want to enter when it comes to my main play. I just wanted to highlight that just because I noticed that over the last couple minutes, just going through my time frames on my gold pair. Man, looks beautiful on multiple different time frames. We'll see where it goes from here. Um, of course,
And
Yeah.
using four, and using four,
What was that?
mhm.
and using 4 minutes.
Oh, was that the CPI or the crude oil or which one?
News.
I haven't even looked.
No, it's the
uh,
it's only low impact news. It's the 42. What is it? Red Bull. You're on the
Yeah, I didn't think there was any high impact today.
no. There's nothing high impact until tomorrow night or tomorrow morning, I should say for you.
I actually, I was talking to Q about this the other day, and the beautiful thing about just really learning, right? Being able to understand these macros, we can easily look at another country, and interpret that country's macroeconomic information and build some type of strategic sentiment based on like the potential of that specific currency, whether just the currency, not the pair or the actual chart, just the currency and the economy, whether that's going up or down. Why does that matter to me? Because something like JPY, Japan has frequent, macro news that it reports just like the United States dollar. Um, and so today the BOJ has a speech, the Bank of Japan, similar to if the Federal Reserve were to be speaking, right? And from what I understand about the Bank of Japan, next week they plan to increase their rates. So this would be something that I wanna get into a little bit later and see how that see kind of the perspective on their country's economy, because then we can use that to also speculate how the U.S. may approach our economy, because everybody needs to work together, like, or things could get out of hand. So um, I can't wait to finish that video you sent me, Q, because that's kind of what I feel like he was getting at when it comes to the economic order, like the world
Uh-huh.
order. Um, and I only got like 8 minutes through
Yeah.
so far. But I feel like he was going to be getting to that point of why we kind of every country that at least involved with one another, especially when we think of importing and exporting, which how much we're involved trade
Mhm.
wise. Um, there we would have to work together, especially on the number side of things.
Yeah. 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 And that the video you're talking about, that's the changing world order video.
Yep.
Yeah. So I'm probably right where you're at actually. I'm about 8 minutes into that one. The second video I sent you, and I'm gonna since we're talking about it, I'm gonna put these in the chat
Already,
and in the
yellow.
Discord for his auto
Awesome.
watch. The second one that I sent, what's the title of it? Uh The Ray Diallo explaining principles of investing. That's the one I got all the way through. And that's the one where he kind of breaks down
In the back button.
the economic machine video.
Mm-hmm. You putting it back to
I'm gonna
see?
get these where should I put this? Where should I put this?
You want me to take it?
I'm gonna put it in.
Hmm?
I don't want to do that. Here, where I do-
Want me to take it? It's fine.
Options. Now I'll put it in the community chat, I guess. One.
No, Q, what you said a second ago about the using higher the multiple time frame mainly on a higher scale, um, and then the
Mhm.
fundamental aspect is, bro, that's literally it has been providing me so much, like that fundamental side is cleared, just cleared so much. I feel like I see, especially those higher time frames, I can just interpret it so much clearer. Um, Even as I look at like right now, there's just all those wicks, right? We see at that all-time high. And we're like, man,
Mhm.
is that showing me a lot of projection from that area? Like what are we gonna like can we even ever return to that area? But then we can just really just flip over to that daily and we kind of already see the correction that was made. Like
Mhm.
it's completely aside from the candles, but within the volume in that level, we see that correction is already there. And then we kind of play this forward a week, and we think about, let's just say that the interest rates for a moment just completely deteriorate the dollar. We know that if the dollar goes down, gold's going up, no matter what. Not no matter what. Let me not say that, but we know we're gonna be pretty strong on that because the gold
Mhm.
is a safe haven for investors and currency. Um, and so with all those liquidity areas and with the daily already kind of showing me that we might head back bullish, um, I told I told myself the other day I think we might go hit 3K by next week on gold.
Mhm.
Don't call me crazy,
Mhm.
but I think we
Very
might
well
hit
could.
3K.
Very well
It's
could.
only
Wouldn't be surprised.
500. Yeah, it's only 500 pips. Um, in that video. he said in the first few minutes, it was like the 2008 recession, and then COVID 2020 is when we saw like just those commodities, stocks, and gold take have really, really strong movement. I'm gonna pull that video up real quick so I can.
Yeah, because what was his point there? He was saying that when currency is being devalued, people will buy up the gold, decreasing the gold supply, and decreasing the gold supply obviously increases the price of gold. Um, I think I'm tracking that right.
No, I think you're 100%.
But yeah, man, shout out Ray Diallo. I really like his kind of pragmatic approach to economics. I think the way he kind of approaches it is very much how I see myself approaching the economy and the market. Uh, yeah, and one of the principles, kind of is little side note. Um, he mentioned, the gold mine for investment is to have 10 to 15 highly diversified investments that are, again, just all different from each other. So we talk about diversification, diversifying our portfolio on this call, to kind of get the validation from him, and hearing that number 10 to 15 highly diversified investments that are vastly different from each other is the gold mine. And diversification is more important than being particularly good at anything, when it comes to investment world. So I thought that point was particularly interesting for me.
What were
I
some
want to get into. I was Go ahead.
So say
what
that
were
again.
sh-
So purification is more important than being
I think it was being like overly, good at, let's say, forex, right? So the
right.
diversification of um that, is that correct from what you're saying?
Yeah, and he uses the term. He says it just like this: diversification is more important than being particularly good at anything. And what I think he's getting at is, diversification and having diverse investment is more important than being like a master at stocks specifically, or being a master at forex, or even just looking at the stock world, being a master at just one, intricate part of the stock market, that you invest heavily in. Um, and so I'm gonna backtrack a little bit, because what I said there kind of brought something back. And um, diversification is much more important than being heavily invested into just one thing, or two things. Spreading your investments out, spreading your money out across multiple different investments over time will be much more valuable than if you hit on something and you just kind of stay in that and kind of milk, um, whatever it is, that you're invested in. But again, there's still, obviously more understanding I need to gain in this. He was talking about bonds, he was talking about stocks, um, those two particularly. And diversification can come, just in the stock market, right? You can be invested in very diverse, very different businesses, very different industries. So that can kind of attribute to the diversification as well. Then you have, the safest thing, you can invest in bonds, government bonds. Um, So yeah, I'm gonna start to build. I'm gonna keep listening to Mr. Ray Diallo, gain insight from him. But pretty soon here, I'm gonna kind of build out a list of, just 10 to 15 things that I could see myself getting invested in. Just kind of have that list built out. Of course, could be subject to some change over time. And then again, over time, I'll just start to, continue to diversify. Maybe a couple months goes by, and I have an opportunity to diversify even further, get involved in something. And of course, every time you diversify, it takes, research and understanding of what you're getting into, which I think is really, 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 really important. Yeah, diversification is good, but we still have to, do the research and make sure we're doing something that's optimal and something that we're going to be able to be successful with. Um, so yeah, that's the name of the game, from my understanding, diversification.
When I hear that too, I hear risk management. Just being able to,
That's all it is.
not put all
That's
your
that's
eggs
it.
in one
That's
basket.
same, 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 same. You know, mm,
I'm trying to get my
mm, mm.
chart set up real quick. Get a little different look going on my interactive brokers than my trading view. Actually, I can't do that. That's gonna mess with my eyes. Do that.
Mhm. And you could possibly
Almost
see
finished.
some sort of correction from gold here, or we could continue up just to this next decision making level at 25.19, 25.20 area. Let me see. I'm
I'd
gonna I'm
rather
gonna take
not.
a peek at that area. So
I'd
out
rather not
here.
blow my account.
Yeah,
You blow your account?
yeah. Marcus, I'm not sure. You can given the story, Jason. I don't think Marcus was quite on yet when we were working through your brokerage story.
Oh yeah, I entered a trade today at about about 26 past 12 in the afternoon.
Mhm.
And my the broker's app froze. They had technical issues.
Mm,
So I'm not able to get out of the trade.
what the freak?
Yeah, so I was in a sell and I was actually in profit and couldn't close the account.
Hmm.
Couldn't close the trade. So currently I'm in about a $3,000 drawdown.
And what broker is that, if you don't mind me asking?
Oh, it's with Ox Securities. They're regulated, Australian regulated, and I spoke to them and emailed them, and they've sent it off, and they said that they should be able to compensate me for it, and
Nice.
that the thing is that if, at the moment as it goes up, I'm just watching it
Yeah.
almost go.
Yeah.
Is this
Yeah.
gold? Is this gold that we're looking at?
Yeah, yeah.
Yeah.
So I
Yeah,
guess it will go up, but I'm just
yeah,
hoping that it goes
yeah.
back down to
Yeah.
where do
Yeah.
I need to be down at basically 501, 2501 or 2502
Hmm.
is what I need it to be.
Yeah,
Anyway,
that is
it is what
is
it
it
is.
meta is it MetaTrader? Yeah. Is it MetaTrader that the broker's on?
Yes, it uses MetaTrader, but they use their own platform, but it's linked with MetaTrader. So it's off.
I'm
Interesting.
Yeah.
Yeah, man.
I'm on the jealous side of things
Yeah,
right
just
now, though, just Jason.
Biggest issue is that I could be
because
trading now.
MetaTrader.
I could be making,
Yeah,
Hmm.
you
Yeah,
know.
man, that's just the heartache that institution is just not fun.
The
yeah.
Not
anxiety, right?
fun.
Uh,
Seeing
And
seeing
so,
some correction here.
what is damn? So this is a platform thing. I can't really even say anything about that. almost got me all set up. I probably won't enter anything today, but USD JPY would definitely get my attention tomorrow. I want to follow this Bank
Yeah,
of Japan speech. So like you.
Nothing. Nothing. Got nothing at the moment. Nothing at the moment. I was saying I haven't peeked at USD JPY yet this morning.
I gotta show you guys a new setup.
See.
Oh, there we go. USD JPY on my left. I'll probably do 5-minute chart over there. Keep my MACD separate from my cloud. And then we got buy and sell buttons. It's funny because my this broker, I probably did something in the sign up process that permitted this or disabled this, but I can't trade gold. I don't think it'll let me. If I'm for I understand, I'm not gonna hit the buy or sell button, but when I do, it's not gonna let me just because you have to have a certain like amount. It might have been something I did with like my income or something that I would have to like go back into and fix. But yeah, it won't let me. It won't let me enter on gold, which is fine, I guess. Because like I said, it was probably something I did.
There's got to be some sort of workaround towards that.
Yeah.
Gotta be.
And I was thinking, is it because I don't have enough funding in there? That's what I thought originally, but
Even so,
yeah.
no.
No, I was definitely confused. But anyways, we'll get it if I can, as we're seeing gold move up here. Of course, the MACD is actually slightly different than like the Chris Moody. It's not the same one, but still the same thing that we're looking at there. Just don't get the red and green dots, unfortunately.
Yeah. But
We
once you're comfortable enough with the MACD, the
Yeah.
red and green dot, they're nice, the visual aid, but you can you just know where they are. That makes
Yes.
sense.
Know what it looks like for it to come
On
in
that.
or you so
Oh, I like the red and green dots. Utilizing those with the the price inefficiencies, it's almost
Uh, yeah,
it's
that's
solid.
yeah, yeah. They are super clutch too. So, Mark, are you with the integration of the charts on IB? Are you going to essentially not use TradingView anymore?
I'll probably only just because I do want to stay within one platform. I probably only will use TradingView for my DXY because that's the only one I can't figure out how to get on here. Um, I just cannot figure it out. I've looked it up. I'm supposed to do this NIBOT USD DX index. Um, but yeah, this happens. So I'm not sure. But so yeah, that'll subscribe. What do I have to subscribe to? Yeah, so I will only use for TradingView the XY. I may um continue like go back just because I have previous markups. Just as I mean, no, I'm not even gonna say that. I want to personally, yes, only use
Your
interactive
workstation, your
brokers.
trader's workstation.
You know. So this is telling me I need to subscribe to be able to increase my level. All right, I'm not gonna do that. Don't need it that bad. What this will do actually is save me. Actually, I will also use TradingView for backtesting because I cannot backtest within this platform.
Mm-hmm.
Yeah, so that kind of changes some things for thinking about my chart now. No, because I like seeing both charts as I'm entering. So yeah, we'll be using TradingView still. Just in the moment, I would say maybe a little less.
Mm.
Being freak though, because when I'm back testing, I don't want to have to go mark up my chart again. So what I may do is make my trader workstation less of a hybrid and more of just where I
Mm-hmm.
have my pairs and my buy and sell positions and my watch list and like more of that stuff all in one place.
Mm-hmm. Mm-hmm.
Because trading view, interesting. And one thing I really like what we're seeing too on this dollar chart here. This is my 12 hour. We can take a look at let's take a look at this 12 hour. This 12 hour is just slightly smaller than the daily in terms of price action on this 12-hour chart. But let's look at this right here. Let's look at this right here. It's volume, right? We got that volume, and we have this movement. We have this bullish movement right here, this small move from this decision-making level that was respected by this 1 hour. Completely different time frame that we're looking on in the 12-hour, but respecting this 1 hour decision-making zone, right? Also making its own decision-making level right there. But the main thing is this volume and how we got a lot of buyers volume. But then this area of price not getting as much buyers volume. And so to bring back to when we think about tomorrow, any news that this thing comes out tomorrow, I won't say so much the month-to-month inflation rate, but definitely the year over year. Like they're projecting it's progressing quickly, like point three. So if we click in here and we go to the history, right, and we look at the consensus to their actual each, even the previous to the actual, like it's not normally, except right here, February 13th, they saw it going from 3.4 to 2.9. So this would be good to see how this impacted the market because it didn't decrease lower than they expected, but still decreased, but was better than they expected. So I would project that day impacted the markets positively, even though it was lower than the previous month. But to go from 2.9 to 2.6, if we get that or anything below it, I really, really see us getting into these $90 ranges. Um, Maybe even this week, definitely breaking this decision making level here. Whether it's a break, and then a retest, and then a consolidation, kind of, as we've seen time and time again. Um, but definitely see some bearish pressure coming down on USD, amid, of course, like I said, the inflation rate drops.
Mhm. Yeah, I'm probably listen to yeah, like I'm with you as far as getting my IB just configured, organized, funded. Um, Probably about 24 hours away from having all that done and set. Hopefully less than 24 hours, just so we can and get in there tomorrow and then start to execute positions. But yeah, still really, really excited and happy that we made the switch to interactive brokers. We talked about just the regulation there and the backing that the broker has in case something goes bad. You have a safety net there that you can rely on and trust. Um, yeah, but yeah, that's the thing we run into just being here in the States, man. It's um, you come across all these brokers that are, almost like half regulated in a sense. Like they're regulated somewhere else, but they're not allowed to like take United States clients or whatever. Not that they'll inhibit you from being one of their clients, but it's just that kind of ambiguity that I've never really, really liked. Um, so to get with interactive brokers and have that regulation, have that safety, that stability, is really it really kind of eases my mind, honestly, when it comes to just my money flow and the growth of my accounts. Because I could imagine, my when my accounts, are in that six figure range, being on I'll feel much better with IB than I would interactive brokers than I would with, say, KOT Forex or any of the other brokers we've used in the past. Not that there's anything wrong with them, honestly, but just for me, my peace of mind and my projection and what I want to do, I think the interactive brokers will be money for us.
No, no,
Marcus, have you looked into buying bonds and securities?
I have not yet.
Process of that. That's definitely
Well,
something I want to get into pretty quickly.
well, which one do you want to buy? You want to buy a
Wow.
treasury bond, a treasury note? You want to buy a treasury bill? You want to buy a floating rate
I'm
note?
not sure yet.
This
I'm
is
not
crazy.
sure yet.
You can do it right here on treasurydirect.gov. You put $100 in. $100 is the minimum purchase you can make.
Mm-hmm.
Maximum amount, at least for treasury bills, is 10 million is the most you can put in there.
That return on 10 million is kind of crazy though.
Is that 35% of
Really?
offering amount? Competitive bid. Hold on. Wait, no, I would look and see what this means. If you guys can see my screen, I'm not sure what the 30. Oh, okay, okay. So does that mean if somebody's bidding $1 million, 35% of that would be the competitive bid? Interesting. interest paid when the bill matures. That's really important there. Wow. So I've actually always thought about it in, so let's say we have a 5 year bill. I've always thought of it every year that interest gets paid out, but that's not true. It's the interest gets paid out in a lump sum at the end of the term. Interesting. Buy a
Mm.
bond. No, you said something key yesterday when I thought of that made me think of bonds. Um, but I gotta pull it up because it was the exact wording you used. You said bonds and annuities as well as a
Mhm.
kind of first step to securing your financial future. Mm.
Yeah.
That really stuck with me.
Yeah, and what really got me on this is Warren Buffett, and
Mhm.
because he talks about this stuff too, and he says
The bonds and
somebody
stuff.
it was an interview. Yeah, it was an interview, and somebody asked him, because Warren Buffett, like, he openly kind of talks about, um, what he, like, his ideology and like what he's invested in, like he openly talks about it. And somebody asked him, why do you kind of give away your secrets? And he was like, I forget exactly how he framed it, but what he essentially said is people just aren't willing to get rich slowly. People want to get rich quickly. But I don't want to say it's easy, but if you just do the right things, you have the right understanding of just how long-term investments work, and you start early enough in, 30, 40, 50 years from, where you're at, shoot, whatever you invested in, early on, that low risk investment, um, it will loom large, when the time comes. But people aren't okay with that. People aren't okay with it taking time, for that interest to occur, uh, and to get rich slowly. So that really called me to get into these long-term, low-risk, investments, starting that now. And then, of course, I'm gonna continue, developing my skills, as a trader, as a day trader in multiple different financial markets. So I'll have, again, this is all in the name of diversification. I'll have some low risk stuff, bonds, annuities. And then, I'll have, that medium risk stuff. Then I'll have, the higher risk things. But kind of diversifying through kind of those tiers of risk, being low, medium, high risk.
Yeah.
That's kind of how I'm approaching it.
No, I mean VXT, the freak.
Yeah, bro. Yeah, yeah. Because I know I'm, barring, death or dementia when I'm, 50 years old, 60 years old, that time is going to come. And I know at that point I'm going to want to do certain things. I'm gonna want to put stuff away for my kids, for my grandkids. I know, like, that time in my life is going to come. It just
Yeah.
will. That clock's not gonna the clock's not gonna stop running for anybody.
Right.
So if I can do things now, I think that's what's so powerful about what we're doing here. Just building this understanding now. So when we do get to that point, shoot, like Mr. Warren Buffett says, I'm okay getting rich in a long scheme, in a long, span of time.
Yeah, no, I just you 100%, bro. Because like we will use what we're doing right now to make money, lose money, make money, like in the day, daily, long-term trading, short-term trading, scalping. But completely aside from that, like but because of this, like it's opened us up to just so many um decreased risk in investments. You know what I'm saying? Like because
Mhm.
of trading. What do you need? Huh? Because of trading, like we now know that there's actually a lot of safer investments. What am I trying to say?
I know what you're saying. I know what you're saying.
Yeah, I just want Opus Clip to freaking pull that. No, I'm just playing.
Um,
But no, man.
Yeah, no, but I feel you though, because you're not saying that what we're doing here, day trading, isn't like valuable because we're going to get rich in the long scheme by doing these low risk investments. What we're doing now, it's negligent. That's not what we're saying. This is different in a sense that this is media, and depending how you play this, right? There's so many different ways you can play this forex game. I think especially with our macro understanding now, I think we've gone from high risk, and we as we get better, that risk is lower and lower and lower as we get better at our risk management, and understanding things. So I think even with this is the day trading thing is something that will decrease in its risk the better we get at it, which
Yeah,
is what's so beautiful about this skill, right? Because the long-term investments, they really just sit there.
yeah,
It's you get in it, you hold it, and 40, 30, 40, 50 years from now, it'll be there for you. But what are we doing in the meantime, right? How are we gonna leverage what we're doing now? Our claim is, you know, building our understanding of the financial markets and the economy to give us an edge in day trading the financial markets. Again, as we get better and better at that, our risk just continues to fall and fall and fall and fall. I've gained some interesting perspective just as I've followed just some of these social media traders, quote unquote, over the years. One of my favorite ones is I think his Instagram handle is like Nick Trades or something like that, Nick FX. Um, he had there was a little clip he posted. He was on somebody's podcast. It's interesting how he frames, success in terms of percentages, year to year. And he said, you'll be it for professional traders, that 10 to 12% year after year after year. That's, what people strive for. And it makes me think like 10% in an entire year in doing this. But he adds the point that and then this is now tying just more into just day trading specifically, what we're doing specifically and how we approach this. There's gonna be tough months. There's gonna be times where we take a few losses. There's gonna be months where we have a red month, or we have a red week. Um, oh no, I lost my train of thought. I'll get it back though. I'll get it back. Um, it is at the end of the day, it's the risk management and being able to um manage our drawdowns over time. That's really the key. And any successful system, any system that wants to be successful has to be configured to where you can manage your drawdowns. Um, as our capital increases, as our accounts increase, the risk management aspect and the managing of drawdowns, the accepting the fact that we are going to take losses in this market. Um, it really settles my mind in a sense when I approach this on a day-to-day basis. You know, in my case, our case, me and Marcus, I think we developed to the point and we have enough edge to where we can get on here and be successful day after day after day. Uh, of course, taking losses here and there, but and that's what will get to me. Honestly, that's where I can improve. Um, just taking those losses and accepting those losses. Uh, that's what's one place I can improve on. Me being a competitor, I want to win. I want to win. I want to win everything. I want to win it all. But understanding and knowing that even people that do this with large amounts of capital and really understand this game, it's not realistic to get on here and just kill it every single day and not have to worry about a drawdown. Like no system works like that. There's no system that will produce 100% win rate. Just not how it's gonna go. Uh,
No.
yeah.
Just getting back to the bonds, or the idea
Hmm.
of investment and that side of things, it does remind me of, and I'm pretty sure Warren Buffett was the one that actually stated this, that
Hmm.
the successful people and the millionaires and billionaires that we have, um, or successful people that make lots of money, they generally have three things. Um, they'll have an active income, so that's a job, or a
Hmm.
business as such. They have passive income, and
Hmm.
they use the active income to create the passive income. So the money that you make is put into, I don't know, real estate, um, or stocks and bonds,
Hmm.
and real estate. So then it's passive. It pays for the asset and also pays you. And then they have residual income. And residual income comes from things like network marketing, or it might be dividends off bonds. And that's something. Residual income's when you do the work once, but you keep getting paid for it years later. And I think you'll find that that's one of the things he says, that they're the three types of income that every single successful person has.
Hmm.
Okay?
Hmm.
Active,
Hmm.
passive,
Hmm.
and residual.
Hmm.
So what you said before about diversification, being more important and being really good at one thing. That's what you're kind of getting at, I think, when you're talking about the bonds and diversifying.
Yeah.
Having said that, I think you still need to do well at one thing to be able to transfer that income into the next thing. So you need to be
Right.
doing well at, let's say, day trading, so you can increase your
Hmm.
income. Here we go. I just got an email from Ops. Do well at something so you can use the income that you earn from that to put it into something
Hmm.
else. Like I said, if it's real estate, or something else that gives you that money that pays off your asset, and then you can borrow on that asset for something else. Um, so diversification definitely important, but you still need to be good at one thing to be able to start that diversification. I think, because if you diversify too much, you're sort of like, you're
Hmm.
spreading yourself thin. But it leads back to what you're
Hmm.
talking about, the bonds, finding the right bonds. And if you've got the money now from doing this for a few years, then definitely that you buy into those bonds, and that's sort of like that's your little a nest egg for that you can build up over 30, 40 years.
Hmm. Hmm.
Yeah, no, and
Yeah,
I love
I
you. Should you go ahead?
go ahead, Mark. No, I'm done. Go
And
ahead.
I was just gonna say, that's kind of the approach when we're talking about the bonds. That I think that me and both you probably will take, as our capital increases, just expanding our knowledge on those bonds to be when that time comes to be able to purchase or utilize. But I definitely, especially where we project, I don't know, where we project, our trading going, right? At least for me personally, that is exactly how I'll probably go about it. Build my trading account, and then from my trading funds, not even yet diversify into those bonds yet, because I want to be able to start with a good amount in that area. So um, I definitely hear what you're saying in terms of kind of maximizing one area of how you're increasing your capital, and
Mhm.
then trickle that down to the other investments. Um, and to bring it back to what we were saying a second ago, is it's literally has started with trading, and for me, it starts with trading. Um, and the beautiful thing about that is, I know even with trading, it doesn't happen overnight. Um, and so while during that time, building the knowledge on the bonds and securities and treasury bills and notes, and how can I diversify once I am in the position to do that, um, is kind of where I'm finding the gold at. But one thing I wanted to say to you really quick too was, I think about why freaking Buffett and these the main, the people that have the most money in the world do this type of stuff. And it's because they know what the heck is going on. Like,
Mm.
they know what is going on. Not because they're putting themselves in the position to, but because they have 50 people appointed to their financial team. And that's probably a large number, but I'm just speaking hypothetically, that are focused on this. Not even to where they're like, hey, Mr. Buffett, the labor market is not doing well. What do you think we should do with our funds? What do you think? No, they're putting it
Mhm.
somewhere for him, and maybe confirming, or he has a person below him that automatically confirms, right? But um, we're just essentially being our own team right now while we figure out where we're going to diversify. But I always just think about, like, if that's the approach that everybody takes, then why didn't I know about this sooner? Like, if that's the approach that all the elites and the people with the most money take, then why isn't that something that's not taught more, right? If that's putting people in position for forever, right, to be financially stable. Um, so that's kind of like my thoughts on there, as I was listening to you bring up the big players in the game.
We touched on this about 2 weeks ago, didn't we?
Yeah, literally.
We got quite passionate about it, I think, about why that happens.
Yeah, yeah, no, that's just it's at this point of my understanding of just the market. Like, I have taken what we've learned in this macro sense, and I've been able to translate it into a number of different industries, and to figure out, okay, that makes sense of why they approach it that way, because it all comes back around to money. Okay, that makes sense why they approach it that way. And just like the import export, I was literally blown away the other day, because one of my friends was like, what do we actually export? Like, the US, the most dominant country we could say in the world as far as economically, and the only thing that we export mainly, I'm not gonna say the only thing, the main top three had to do with petroleum, which then I had to go down the rabbit hole figuring out, okay, is petroleum oil? Because that's stuff that I didn't know. And from now, what I understand, petroleum is refined crude oil. And so those two have a very close correlation. And then I think of the Middle East, right? And the wars that have gone on there over time, right? And can you guys hear that?
baby mom.
Yes.
Yeah, she was
Um,
feeling.
yeah, she was definitely trying to let you know that she was talking, but yeah, it's yeah, he doesn't want it that.
I just typed in a little thing into ChatGPT. I actually, I think I brought up this question the other day, and this is what you're touching on here is what contributes to the United States trade surplus versus its trade deficit, given we import so much, particularly from China, but from
And
all around the
so
world.
so when I'm starting to build this trade puzzle, I love puzzles now that we're talking about it. Think about the trade deficit surplus a lot. And I don't think we will ever get out of a trade surplus because I don't think we want to get out of it because the main thing that we export is oil, and that pretty much controls the world right now. From a number of different angles. And that's stuff that I want to understand on more. Like, why does oil control? And I can start to think about some reasons when it comes to, producing things and factories and manufacturing, like gas, of course, and cars. But I want to have a clear understanding of why oil is so important. Um, but we get so much from other countries as far as our products and services and stuff that we actually give to like people that in the US purchase, um to where if it ever shifted it would screw up every other country's economy because then those countries would now have to figure out, okay, who do we export our products to, like how do we increase our exports, because on the other side of that the US would then be decreasing their imports, which would be boosting um their deficit because now they would be exporting more than they're importing, right? Because we're at like an 80 billion dollar or whatever the case is, but 80 billion is the trade deficit the US is currently in. And so when I just continuously think about that deficit or the surplus on either side, whether I think you said China is in a surplus, right?
I'm not sure. I'm not sure.
Yeah, I think last time we were talking about it,
Let me see.
I think China's in a surplus. The US is in a deficit. Japan's in a deficit. Like, I think that was what I saw. But yeah, I don't think we could ever when one deficit decreases, another surplus decreases, which affects. So when another deficit decreases, which means that would mean when the deficit increases, those exports for that country would increase. And then when a surplus decreases, those exports decrease, which if the exports decrease, the money for that country, their currency is probably gaining value because if a country's exporting is decreasing, a country is not purchasing from that country. Why? When they purchase from that country, because it's more expensive. And so, like, they literally work
Mhm.
so much together. That shit's crazy.
Yeah, so I got a list. ChatGPT gave me 8 countries that are in a say. Excuse me. It gave me 7 to 8 countries on the trade deficit and trade surplus side of things. So countries with trade surpluses, China's number one. China often runs one of the largest trade surpluses globally due to its vast manufacturing base and exports of electronics, machinery, textiles, and consumer goods. Number two is Germany. 3, Russia. 4, South Korea. 5, Japan. 6, Norway. 7, Switzerland. 8, Netherlands. Those are countries in a trade surplus. And countries with trade deficits, the United States is number one. The U.S. consistently runs a large trade deficit, meaning it imports more than it exports. This is primarily due to high consumption of foreign goods like electronics, automobiles, and machinery, and reliance on imported energy. However, the U.S. exports high value goods and services like aircraft technology and financial services. That's interesting. Number two, United Kingdom. Three, India. Four, Brazil. Five, Turkey. Six, Mexico. Seven, Australia. And then there's countries that give me two countries with varying trade balances, meaning some countries fluctuate between trade surpluses and deficits depending on external factors like commodity prices, global demand, and economic conditions. I'm going to give me Canada, which typically runs a small trade surplus due to its energy exports, but can face deficits depending on global oil prices and manufacturing imports. And then France, which has fluctuating trade balance, exporting high value goods like aerospace products and luxury goods, but it also imports significant amounts of energy and machinery. It's interesting.
Interesting. Yeah. The energy and the financial services is what got me. Um, I'm like,
Hmm.
what is a financial like? What does that look like? A financial service, as far as on the trade side of things.
Hmm.
It'll be interesting to note that most of the countries that trade in surplus compared to the countries that trade in deficit, and I can use Australia as an example there. There's no surprise that we're on that list on number seven. Is
Hmm.
We don't manufacture anything here pretty much anymore, and we haven't done for decades. Whereas
Hmm.
places like the Netherlands and China and Switzerland, I mean, they have good economies, but they also manufacture and they have um, good employment rates. So that's why they can export and don't need to import much. Um, you
Hmm.
know, we don't build Australian-made cars anymore, and they were one of the proudest things that we ever did. And the last one closed maybe 20 years ago or more. Since the 1990s
Hmm.
or 1990, 91, when import tariffs were taken off, it was cheaper to import anything
Hmm.
than it was to manufacture anything in Australia. And we're talking 30 years ago. So it doesn't surprise me that, that we trade in deficit. And and then there's also the trade relations that we have, and every country has with other countries, to try and get them to buy the things that we do have, we have to accept other things. So and that's the same with the States, really. You think about it,
Hmm.
and every country that trades in deficit. They don't manufacture as much as they
Hmm.
used to, as the ones that trade in surplus do. I
Hmm.
just think it's interesting to note that.
Yeah, no, really interesting. And I'm,
Mm.
I'm reading through
Yeah,
the Australia paragraph here. It says
yeah,
the exports in terms of Australia, exports of natural resources like coal and iron are significant. Iron ore are significant, but yeah, nothing that relates to anything that they specifically manufacture.
Well,
Uh, that's interesting.
natural resources.
Yeah.
yeah. And my brain, it always goes to the question of, I have to know why. I have to figure out why that's the case. I'm gonna look it up. And I'm sure we could start to talk about you know possibilities, but it all comes down to exactly what we just mentioned, and I just don't think they're and it's gonna bring me back to that video again, Q, the economic order. Um,
Hmm.
there's some type of overseeing treaty or agreement or something that keeps things exactly how they're flowing. And
Mhm.
it has to stay that way, or our the entire world is going to just like it would be messed up. Like that's kind of how I'm looking at it. Like imagine if we had
A change.
freaking, China, they didn't produce anything. They didn't export anything. Like that would affect a lot of businesses and economies. All right. What if the US just said, all right, we're not producing any more oil or refined oil. There's a few different terms that I have to get better on. But what if that happened? Right. And then okay, now people have to start exporting to other countries, and while other countries are dealing with countries that have never dealt with each other before, and it's just um, it would just turn into chaos. Um, so it's
Mhm.
interesting to hear that even countries like Norway has a surplus,
Mhm.
because what is Norway exporting that I use? But there is probably something like energy, which that's what I want to understand. I didn't know that you could really.
Oil, natural gas, and fish.
Oh,
It's an
fish.
energy-rich country. Yeah,
Oh,
oil,
you're
natural
saying that's what
gas,
they.
and fish
Okay.
for Norway.
Yeah,
Yeah,
and that's
benefits.
interesting. Because the U.S. probably
Mhm.
doesn't have access to natural gas like that. You know what I'm saying? And so that's super interesting. I wonder what the financial services is, though. I'm still intrigued on that. Um,
Yeah, so
when I
I got it. I, I got it
well,
right here in front
let
of
me
me.
let me know. Let me say this before we say it. Does it have to do with government bonds or security? Have to do with that by chance?
No,
All right,
no,
I'm ready.
none of
I'm
my
ready for
original
it.
run through run.
But let me hear it.
Okay. So I said when it comes to the US, and then I said it stated the US exports high value goods and services like aircraft technology and financial services. What does financial services mean and how does that contribute to trade deficit slash surplus? So when we go down to how financial services contribute to trade deficit slash surpluses. While trade balances are often associated with the exchange of physical goods, services are also traded internationally. When U.S. financial institutions provide services to clients overseas, such as managing investments, consulting on mergers and acquisitions, or facilitating international transactions, they receive payments from foreign clients. These payments are considered exports of financial services, contributing to a trade surplus in the service sector. And contributions to trade surplus: one, global leadership in financial services. The U.S. is home to some of the largest and most influential financial institutions. For example, JP Morgan Chase, Goldman Sachs, Citibank, and BlackRock. Foreign clients, including governments, corporations, and wealthy individuals, use these institutions for investment management, trading, and advisory services. The U.S. is a hub for global capital flows. When foreign companies are when foreign companies and investors bring capital to the US for financial management or use US institutions for transactions, it generates revenue from these services. US insurance companies provide coverage for multinational corporations and individuals around the world. This is another source of income that counts as an export of services. Offsetting goods deficit. The U.S. often has a trade deficit in goods, meaning it imports more physical products than it exports. However, the country runs a trade surplus in services, particularly in financial services, which helps balance the overall trade picture. The surplus in financial services can offset some of the deficit in goods. And so the last part here is the net effect on U.S. trade balance. Surplus and services. While the U.S. imports many physical goods, the export of financial services helps generate a surplus in the services sector. This reduces the impact of the overall trade deficit. Positive economic impact. The financial services industry adds significant value to the U.S. economy and supports job creation, income generation, and global influence in the financial sector. In short, the financial services are a key export for the U.S., contributing to a trade surplus in services and helping balance the trade deficit caused by high imports of physical goods.
Off clap.
Interesting.
Off clap the people in the back.
Interesting.
That
So that makes sense, right? Because
makes
the
so
largest
much
banks in
sense.
the world are here in the United States. The biggest companies in the world, no matter where they're at, I imagine they'd want to use the biggest and most well structured and best banks to move their money through. And of course, a lot of them work with the U.S. with a lot of different things. And U.S. banks are used in all those transactions. But it's interesting to note that like those transactions contribute to the trade surplus in the United States.
Yeah, and from how I'm looking at it too, they're only contributed to that because they're not just like sending the money through like a Chase. They're opening up a Chase bank account and an investment, like because I think of like how Chase can invest into an S&P. Like that's how the money
Mhm.
from international countries gets into U.S. stocks and U.S. bond. Like that literally just made so much sense to why we would definitely have a surplus in our services. Because I would always think about like, like how does that? Yeah, yeah. Can you actually? I want that. You just put that into AI. Would you put into AI exactly? I want that same. I want to look at
Mhm.
that. I want to look at that. What was the question you asked again?
Um,
What contributes to the financial
Hold
services?
on. I'm gonna
No,
copy and
no, it's
paste it in
making.
the Zoom chat. Yeah, Mario, I copy pasted in the Zoom chat. You just probably take care of some real quick, but
So you put it in the Zoom chat?
yeah, sir.
Yeah.
Wow, Jason, shoot, you're back in play, damn near on your trade.
Hopefully.
Gold completely corrected that bullish movement. We're back down to 205.06.
Yeah, dollar started moving north.
205.
Uh, the only
Mm-hmm.
thing is I haven't been able to place any other trades, so I'm missing out on all that.
Mm-hmm.
But if
Mm-hmm.
it gets down into my profit area, I'll be able to close it out and then see what happens after that.
Yeah.
Ooh. Can't copy and paste this. This is okay. That's secure, I guess.
Hmm. Have you guys executed anything today?
No, sir, not yet.
Are you still
Negative,
setting it
negative,
up?
negative, negative.
Yeah. Right.
Yeah, still setting up the IB, the interactive brokers. Like I said, I think about 20 hours. I'll be ready to go. Work through the account funding workflow yesterday. Yes, it should be fired up and ready to go come tomorrow. But fuck, I'm closing tomorrow, so we'll see if I usually I don't trade on Wednesdays. I mean, I might catch the back end of that New York London overlap. Uh, but I don't get to bed till about 3 in the morning on my I guess Tuesday nights, Wednesday early morning. So
Oh,
those
yeah.
Wednesdays are tough, tough, tough. But could possibly what do I have tomorrow? Got training in the evening. Could possibly open up a little live for an evening session tomorrow. Keep you updated on that. Maybe I'll do that just to hop back in. But Thursday for sure. At the latest, Thursday at the latest, we'll be back executing live positions. A period I'm really excited for is because over the last couple months, done some good amount of demo work and executed live positions. Been on a live account as well periodically over the last couple of months, but I've been really invested into just our research and our understanding over the last couple of months. Obviously now switching brokers. Um, so really, really, really excited to, kind of get back into the swing of, just daily executions of live positions and the growth of our capital. Because we have been focused just on our research and our macro understanding. And I think now, especially with the brokerage change, it's a really optimal time. It's the right time for us to get back pushing on the execution side of things.
Yeah, I mean that's what we do it for, right? I'm not just sitting trying to gain all this
Mm,
freaking knowledge and not risk my money, right? And put the like you said it the other day really well, the investment in yourself that we make in giving ourselves money to trade with. So
mm,
yeah, I'll be trading tomorrow. The only thing I'm trying to figure out is the exact quantity. That's one thing I think I have a good understanding, but this is if this is in units, I want to do 1,400 units, but I think I can't do 1,400 units. It would be a point 0.014. And I think I can't do that because they have to account for the fees. So I just want to double check on that for my position sizes on my interactive broker, and then I'll be good to go tomorrow. So
mm.
I'll be taking positions. I'm
Awesome.
Yeah. Yeah, and I spent time last week and this week just marking up my DXY, XAUUSD, and USD JPY. Markups that are still standing, still good. So yeah, as we I think I think we played it right, man, Mark. I think we played it right. Just over the last couple of weeks, last couple of months. For just a really, really good push through Q4, and moving into the new year. There's gonna be so much opportunity over the next couple months, to get in there. I think we recognize that just with the economic climate. Um, so there's gonna be an abundance of plays for us, and a lot of opportunities for us to increase our capital over the next couple months.
Love hearing that.
So brick by brick, brick by brick, as Jason says. Love it. It's interesting. So I looked up, kind of going back to Buffett, and I just typed into the Google browser, if Warren Buffett is into bonds, and it says Warren Buffett isn't a fan of bonds, but he sticks with stocks and cash flow. Buffett likes cash, particularly U.S. Treasury bills and stocks. That's his the T bills.
Hmm. Actually,
That's what he's into.
I was discussing that with my neighbor. who's actually works for the government in finance.
Mhm.
Marcus, you know how the question came up about how come why is he putting so much money into the yeah. Oh no, yeah, it's what we spoke about that. Yeah, how so much he's transferring so much into cash.
Mhm.
Like he's like liquidating a lot of stuff and putting it into cash. But the question is he
Mhm.
putting it in T-bonds,
Mhm.
not so much putting the
Mhm.
money under his mattress sort of thing.
Right. 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 Yeah,
And the
that's
thing
an
is, because
interesting little.
he one thing that, and this is something once again, gonna have to get a lot of history we'll be able to find on. And it was in that video, that economic video, which I'm 8 minutes in on. I'm gonna finish today, I promise. At every point in history, at some point, let's say dated all the way back to like the 1600s, the 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 government, doesn't matter which government, has ran out of money, right? And which means there's always been something backing the quote unquote money they have, right? Which was gold. And so anytime I hear cash now, like it's it's ultimately just like words. Like actual dollar bills and even what we know of to be in our bank account now. It's just like credit. You know what I'm saying? It's completely separate from how it used to be, where we would have $100,000 in our bank account and we personally could go pull out our equivalent in gold, right? We would get our equivalent in gold. So when I think about um like Buffett, when we're talking about this, I want to know what type of information he has for the future of our currency to be putting so much value into our currency, if that makes sense. Because those T bills he has, it's not like they're just agreements to the funding that he put into them. Like we just looked it up, right? I'm gonna pull it up real quick again. If we go to these, this is exactly the site. I mean, there's probably another one, but from what it's told us, this is where even governments come purchase stuff, right? Oh, this is bonds. We want bills. Right. And so also let's see. Let's look at this real quick. Bills are sold at a discount or at par for face value. When the bill matures, you are paid its face value. And so when the bill matures, you are paid its face value. We also sell cash management bills. Wonder what those are. And so when I'm just thinking about our currency and where it's going, I'm a big believer in cryptocurrency and just the efficiency of 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 that currency, and how like just the transparency aspect with all like the blockchain and stuff like that. Um, and to think about technology right now and where it's headed with AI and stuff like that, I feel like we are trying to get things as automated as possible, and especially the things that we can use, data to consistently track and kind of keep a hold of. I'm thinking about that when and considering all this stuff. And so we think about Bitcoin, right? I look at Bitcoin as the liquid gold. That will be our version of how the dollar was pegged to gold. I have the disposition, this is what I see in the next 15 years, 10, 15 years, and that is The US will have a digital currency similar to how there's USD Tether and USDC, which are cryptocurrencies that are pegged to the US dollar. The US though will have its own digital currency that will be pegged to Bitcoin. And Bitcoin will be liquid gold, right? So stuff like this, when it's saying after the term is paid and it's, after the bill matures, instead of being paid in US dollars, which really has no true value because there's not enough gold for everybody, it would then be getting just paid out in liquid gold, which would be Bitcoin. So that's kind of how I can see this unfolding because I'm thinking about why would you hold on to something that we know has consistently shown to lose value? That's kind of how I'm thinking about it when it comes to Buffett, you know? Um, so yeah, that's kind of my take there. As I think about these
Mhm.
bills and stuff continuously.
Right. And it really is. I that's interesting. I've never really thought about that before, and because my take on crypto is we'll see. When I think about crypto, I'm like, because I know it's going to be heavily involved in the pretty soon future. But to think about crypto like that, and it's kind of a new age Bretton Woods agreement where the dollar is backed by the gold, which we know, and even they didn't know it then, but that's just not sustainable because the gold is going to run out. There's not enough gold on the planet for everybody. So it's going to run out at some point. So it wasn't a sustainable agreement. But with something like Bitcoin, especially with the blockchain and kind of, I really don't know enough about it. But just with the way that crypto can be kind of regulated, monitored,
Yes.
it make perfect sense, for a system to arise, an agreement to arise where the dollar is backed by something like Bitcoin. And that's just the way it's just the way it is, the way things are.
I think it's
That
something
that's
we're
something
we're
I'm on.
we're yeah, I think it's something we're really early on. Um, like I said, probably like 15 years, but I do think it's something that's a lot closer than it seems. There's California, uh, California just passed something to where one of their DMVs basically allowed for there to be the car titles on the blockchain,
Mhm.
right? And what that does is it just makes it easier for things. So aside from just finances, there's a lot of other things that Web3 and the blockchain will be used for, similar to like Google sign on, right? How we hit, you know, sign in with Google, like that is a form of Web3. Um, and
Mhm.
that and then cryptocurrency, like it all plays together and all plays off of each other. Um, so damn, I forgot what I was gonna say. There was a meeting not too long ago that Trump spoke at after this individual did, and I forget the exact person, but I'll bring it up. They said they were gonna buy 500,
Mhm.
and it was like a government. They said they were gonna purchase 500 Bitcoin until they hit a certain amount. I forgot the exact amount, but they were gonna purchase 500
Mhm.
Bitcoin each year until they hit like a certain amount of Bitcoin, and the number was ridiculous, and it would have taken like 25 years for them to hit this specific number, which I'll find that video, um, but stuff like that is kind of what I am considering at this point because. Like you said, they didn't think gold would run out, and I don't know a lot about Bitcoin mining, and I don't
Mhm.
know a lot about that and how that comes into about, but one thing I do know is data centers are on a very, very large increase in terms of they're running out of they're not running out, but there's just searching for more space to put data centers. And from what I understand, data centers is how Bitcoin gets mined, because it's just a whole nother rabbit hole there. But my knowledge is very brief on how Bitcoin is mined. Um, but what I do think is that it's a lot easier to mine Bitcoin than it is to produce gold. You know what I'm saying? So having something that we can consistently rely on, to back our currency.
Mhm. Mhm. Yeah, and I know just anytime I drive to my pop's house or your house, I come across two really, really large data centers. Where like it just looks like all there is in there is just servers and computers and just data extractions mechanisms. It's crazy in and that kind of ties everything back into just energy, bro. Like all these places require so much energy. You know, I mean, this the world. This is crazy. It's crazy how everything just fits together, but like it's its own like thing, but it like impacts something else. Just
Yeah,
the
because
nature of the cause and effect. Cause and effect. The world is big, man. A lot of big things going on.
I would want to know, based on you saying that, what I mean, is this is gonna sound like a dumb question. I feel like, even though there are not those, but what is energy? Like, for us to be,
Mm,
if we're importing that, and that's something that other countries are exporting, exactly, for a data center specifically. I mean, electricity, is that all we're talking about? But like, what, for to get that entire data center to run, what was imported into the United States for that data center to perform at a high level? That's kind of what my next question would be. Because then my next question would be, after that, which one of these countries exports exactly what is needed to mine Bitcoin? Or if that is like, I would start to want to figure out how to have those pieces of the puzzle fit together. Because then
mhm,
I think about Nvidia. Nvidia, we all know, is one of the most dominant stocks right now. Their
mhm,
primary source of revenue came from data centers. Primary source of
mhm,
revenue. That means that, from what that means for me, is that their data centers is what produced all of what makes Nvidia, the AI chips and whatnot. So that's where I looked it up the other day. It
mhm,
was like 80% of their revenue in 2023 was from that. And so
mhm,
they will play a factor in stocks, and not stocks, but the market. Because what's interesting, that when we've gone over like the key economic indicators, a really important, that's kind of like a low key indicator for the economics, is the stock market, is how the stock market is doing, because that's what,
yeah. No,
moves money. Go ahead.
sure. I don't know. I was just saying. I was just looking at just the various types of energy. Because when you said that, I went to chemistry. I went to just the various different sources of renewable and non-renewable sources of energy. So I just put up a list of non-renewable and renewable sources of energy that are used. So number one is fossil fuels, non-renewable energy, things like coal, oil, and natural gas. These things are used. Coal energy is produced by burning. For coal, energy is produced by burning coal to heat water, creating steam that turns turbines to generate electricity. For oil, crude oil is refined into fuels like gasoline and diesel, which are burned in engines and power plants to produce energy. And as far as natural gas is burned to produce heat or electricity, often used in power plants for electricity generation. So that's kind of where possibly data centers come into play. Natural gas, which is often used
Mm,
in power plants for electricity generation.
mm,
Then you have nuclear energy, which is non-renewable as well. There's something called nuclear fission. nuclear fission, energy is produced by splitting the nuclei of uranium or plutonium atoms in a controlled reaction. I don't know if you ever watched Spider-Man 2
Mm.
with Doc
I love
Ock.
that one. Oh yeah.
Yeah, that's what he's doing when he has his little accident. Nuclear fission. The heat generated from this reaction is used to
Interesting.
produce steam, which turns turbines to generate electricity. And as far as renewable sources of energy, you have solar energy, wind energy, hydrogen power, geothermal energy, biomass energy, and then you have hydrogen energy, ocean energy. Yeah, just
Interesting.
over the years, just more and more ways to mine energy have come about. Things have gotten safer and uh, have just the systems have gotten more advanced to the point where we can just extract energy from various different resources safely. Uh, but yeah, that's energy. That's our energy right there.
It's interesting. The wheels are turning. Sometimes I wish that I was able to stop the wheels from turning so that I can turn the other wheels. Um, but yeah,
Mhm.
it's interesting that energy is we think it's so simple by just plugging it into a wall, and then that's how we get energy.
Right,
And it's just one of those things of
right.
again that we take for granted, low key. It's just like because some places don't have the ability
Mhm.
to have that stuff. So it's like, damn, makes makes
Mhm.
sense. Um,
Mhm.
I have found that what I was looking for a little bit earlier, it was actually President RFK Jr. So the other um party that I think it was
Mhm.
running for the was a Democratic Party or the Republican Party.
He was running independent, has now
Independent.
aligned with Trump on the
Okay.
Republican side.
And so when I see stuff like this, like I know this was RFK's, thing that he was pushing, but I look at it all as all
Mhm.
the same. Like for this to be in speculation at all is kind of important. So right here it says Kennedy would sign an order requiring the U.S. Department of Justice, U.S. Marshals to transfer 200. Hold on. So why would they be transferring it? Right? Why? Because it's being held by the US right now. They hold Bitcoin right now. I have to figure this out. This is
Mhm.
to the Federal Reserve, right? Because the US and the Federal Reserve are completely separate. The Federal Reserve is the central bank for the US, right? By as a strategic asset, he said he would order the Treasury Department to purchase 500 Bitcoin daily until the reserve, the central bank that is holding your money, my money, his money, their money, until the Federal Reserve reaches 4 million Bitcoin. So like when I saw that in the speech, I'm like, hold on. So they're really going all in on this Bitcoin
Interesting.
thing. Like they're going all in on this Bitcoin thing
So
because
what
brings
would
me
4 million Bitcoin be? Sorry, go ahead. I'll find
four
that number.
no no 4 million Bitcoin was like trillions, and that they said it would take 25 years to hit 4 million Bitcoin. They hold 204,000 now. Maybe it would take more than that. But yeah, you can that was pretty much all I had on that. It was just like damn, you know. And then if you think about okay, now this person is actually is backing Trump, and I'm not super deep into politics for a number of
Mhm.
different reasons, but I do have brief knowledge about how I feel about who I would want running the economy. I don't care about the individual. I truly don't. In this aspect, right?
Mhm.
and that would be from it would be Mr. Trump, you know. And so thinking about somebody like this that is backing him, and even with that, I still see them all in the same light. And politics is a really juicy topic for me. But this is something that, come on, like it would make the most sense to avoid the stuff that happened. I can't wait to get to that article from that video from Ray Diallo and the just seeing over the
Mhm.
course of history how many times countries just print money, knowing they don't have enough in the Federal Reserve, like actually knowing, and then just defaulting on their payments, basically. Like that's what they said
Yeah.
that video was like since 1680. That's what happened, something like that.
Yeah.
You would go to the bank
Yeah.
and try to get your money, and they're like, let's just print more. It's like what? Like so there has to be something to stabilize this cycle.
Yeah. Yeah, no, and it make perfect sense because RFK Jr.'s whole thing is energy, um, uh, energy, renewable energy, climate, and this. This is kind of like his like what he's focused on in his career.
Mm.
Uh, so yeah, it'll be interesting. That 4 million Bitcoin would be worth approximately 104 billion USD.
Mm.
I think like that's really just the start. I know it'll take time to get there even, but I imagine that's just the start of kind of the reserve that they want to have when it comes to Bitcoin. It makes total sense. It makes total sense. And what I've heard, Trump talk about, you know, cryptocurrency and kind of the future of economics. And I feel like he knows that things are going to change and they have to change and advance into a new age.
Yeah.
Um, so yeah, it'll be. I think he has a really progressive take on that, which I like. Um, so yeah, we'll see. We'll see.
Yeah,
When it comes to politics, yeah,
two questions I think about that I have. The first one is wasn't so our RFK, I'm assuming has some relation to JFK, right? Wait, and that was
it's
wait,
that
I'm
was
thinking
his
of
uncle.
I think I'm thinking of Nixon. Nixon is who dealt with the gold with removing that gold agreement.
Yeah.
Okay, okay. So disregard that
Yes.
one. Second one is so you said the 400 or the 400 Bitcoin was what do you say again?
The 4 million Bitcoin is 104 billion.
Okay. Um, and that is just US involved. That's not even mentioning all the
Right, right, right.
imports of the financial services that we'll get from those international
Hmm.
countries that will
Right.
go to the Federal Reserve because of agreements made from the U. It's just man, that's a beautiful domino effect right there. So yeah, that's some interesting
Yeah.
stuff. I'll have to watch this live call again to bring back all the stuff I want to get into. But yeah, this was fire today. This was fire. This was fire.
Yeah, we went through a lot today. We're kind of jumping around there a little bit. It'll be interesting to kind of watch it back to see how it all tracked.
Yeah.
But yeah, though, I'm gonna get off here 7:31. Closing bar tonight. I'm gonna probably sit down and do a little bit of research for a couple hours. I'm a little sleepy, so I might hit the gym right now, wake myself up, and then get on with the rest of my day.
That's a good idea.
Yeah, no, and I'll be pretty much working all day today. I'll be on the charts looking at the market. I had this little markup here once price got to this level. Once I highlighted my orange box, wanted to see how price reacted in this area and kind of moved. Exactly how I would like to see it too. I don't want to see it continue to move down for the rest of the day, to be honest. Like I wanted to find a consolidation point, because I want tomorrow's inflation rate and other news folders to indicate pretty much everything I need for it to be able to understand how it's going to affect next week. And so as I'm looking on USD JPY right here, I'm looking in this level. I'm just seeing the points of liquidity that were left at decision making levels as we go down, and the same thing that was kind of left liquidity levels, decision making zone or decision making level a little bit more below where we're at right now. So I do want to see price play in between this 142 to 143 radius throughout the rest of today. And then, as like I said, as we get into tomorrow morning's news, really start getting some movement. And then tomorrow morning is when I'm ready to start playing ball. Like I can see myself holding my trade position even throughout next week. Just because I'm just ready. We haven't traded in a while as far as live. The macros have combined with the technicals is just money right now, and we're walking into a really, really good time as traders. Because we're not going to have to deal with at least the election and all the volatility and turmoil involved with that for another 4 years, right? So provides a lot of stability for price action, in my opinion. So we'll see. We'll see.
Yes, sir. Yes, sir. All right, Jason, Joe, appreciate you guys hopping on with us this morning.
Yes,
Marcus will be on
sir.
same time, same place tomorrow. I'll see you guys same time, same place on Thursday. Like Marcus said, we're in here playing ball from here on out.
Oh, yeah.
Just a quick update before you guys go.
Talk to me.
Yes, sir.
That gold took me down. I got out of that trade because the app is sort of spasmodic. It'll freeze and go and freeze and go and freeze and go. But I got out of it with 7.2 pips in profit.
Nice.
Fuck yeah. Oh yeah.
Well,
Hey, those inefficiencies.
Yeah, what a
considering I was
whirlwind of events there.
$3,900 down earlier today. That was just stupid, man.
Fuck it.
Anyway.
Yeah, you'll sleep a little bit better tonight.
Yeah, well, I just hope they sort the app out so I can trade tomorrow.
Let's do it.
Right.
All right, thanks so much, guys.
Well, yes, sir. Godspeed. All right, fellas.
Always learning
See y'all
something
later.
from you guys. It's fantastic. Thank you.